Okay, so hello, my dear students. So welcome to another discussion for translation of foreign currency financial statements. Okay, so or translation of foreign subsidiaries financial statements. So in this video, shall be discussing in particular current rate method. So let's have another discussion for the temporal method. Okay, so we have here now assume that January 2, 2014, P company, a Philippine-based company, acquired for $2 million an 80% interest in S company, no, who maintains its books in US dollars, and they are in conformity with GAAP. Okay, in the Philippines. So the parent's functional currency and the presentation currency is actually the Philippine peso. Okay, so since Philippine-based company naman yung parent. So S company's financial statements are prepared in the local currency unit, meaning to say the US dollars or the foreign currency unit dollars. Okay, so the translation process will be illustrated under two different assumptions again. So in this video, we shall discuss what if the US dollars is the functional currency. Okay, so which is actually equal to the local currency of the foreign subsidiary. And then what if the Philippine peso is the functional currency? So, diba, if the US dollar is the functional currency, which is actually the same with the local currency of the foreign subsidiary, we'll use current rate method, which is actually our focus on this video. And then the second, diba, which is actually what if the Philippine peso is the functional currency, and that's actually a remeasurement, and we'll use temporal method, and we shall have that in the succeeding video. Okay, so exchange rates for the US dollars for 2014 fiscal year as follows. Okay, so we have here on January 2, 2014, a date of acquisition that's 40 pesos, and then on September 1, 2014, we have 40.10. December 31, 2014, we have 40.25. The average for the fourth quarter is 40.22, and the average for the year is 40.20. So in translating the income statements, it is assumed that the revenues were generated and expenses were incurred evenly during the year. So it is also assumed that the company uses the FIFO cost assumption and that the ending inventory was acquired during the last quarter. Okay, so we have here, no, first we'll translate muna our income accounts. Okay, so again, all income accounts are translated with the same rate, okay, which is actually the average for the year. So we have here the average for the year divided is 40.2. This is actually our average for the year, 40.2. So the sales, cost of goods sold, depreciation expense, other expenses, and income tax expense. And of course, again, the bottom figure, the net income could be translated directly, diba? Since all income statements naman are translated at the same exchange rate. So, pwede na rin yung net income ma-translate din siya using the average rate for the year. So, we have here, diba, our net income is 333,000. So, yung sales natin, that's 121,404,000 translated into peso. Cost of goods sold for 74,370,000. Depreciation expense 4,020,000. Other expenses that's 655,000 times 40.2, 26,331,000, and then income tax expense is 3,206,400. So sales less all the expenses, diba, you have net income of 13,386,600. Okay. Yan siya. So, our net income, no, is translated at 13,386,600. Okay. Then we have to compute now our retained earnings end, being retained earnings end is computed as retained earnings beginning plus your net income less the dividends. So you have your retained earnings end. So our retained earnings beginning, so our is actually 480,000, no? 480,000 yung retained earnings beginning natin, you multiply it with the historical rate since this is actually the first year of acquisition of the foreign subsidiary. So the retained earnings beginning is translated at the historical rate. So historical rate is actually the date when the subsidiary was acquired, which is actually 40 pesos. Okay, so we have retained earnings beginning, we have 19.2 million plus our net income is actually 13 million 386,600 less dividends. No? Dividends, as a rule, shall be translated at the exchange rate at the date when the dividend was declared. So since the dividend was declared on September 1, diba? So it the exchange rate at the time is actually 40.10. So therefore, we have 300,000 times 40.10, that's 12,030,000. So retained earnings beginning, 19.2 million plus net income, 13,386,600 less dividends at 12,030,000. So we have retained earnings end of 20,556,600. Okay? Next, we are actually translating all the balance sheet accounts. Okay, so all asset accounts. Okay, so the cash, accounts receivable, inventory, land, buildings and equipment. Also, we have here our total asset is actually 3,948,000 in US dollars. Since all balance sheet accounts or all asset accounts, no, are translated at the current exchange rate, which is actually 40.25. Okay, so yun siya. Your cash, they do have 37,402,500. Accounts receivable, 24,472,000. Inventory at 33,407,500. Land at 20,125,000. Buildings at 26,162,500. And then equipment at 17,207,500. So again, that's actually the balance sheet account or asset account multiply with the current exchange rate. So you have total assets of 158,907,000. Okay, then all liabilities again, no, all liabilities such accounts payable, short-term payable, and bonds payable shall be translated at still at the current exchange rate. So same yung pagka-translate natin sa asset and liability accounts. So you have here accounts payable, that's actually 25,760,000. Short-term payable, 25,558,750, and then bonds payable of 36,225,000. Again, that's the foreign currency units or in US dollars times the closing rate. So yan siya. Then again, our common stock unpaid in capital in excess of par shall be translated at the date of acquisition. So in this case, the date of acquisition is actually on January 2, 2014. So the exchange rate then is actually 40. No? So even if the shares were actually issued, no, before the date of acquisition, yung exchange rate na gamitin natin is actually yung exchange rate at the date of acquisition. But if the subsidiary had issued shares after date of acquisition, so say for example, they issued additional shares. So of course, that shares no shall be translated at separate mo siya pag-translate. No? Translated yan siya at the historical exchange rate, meaning to say the date when the shares were issued. No? But since in this case, the shares were existing, no, in the date when the subsidiary was acquired, so it shall be translated at the exchange rate at the date of acquisition, which is actually 40 pesos. You have common stock of 960,000 times 40, that's 38.4 million, and paid in capital excess of par of 300,000 times 40, that's 12 million. Okay, then we have our retained earnings computed kanina, that's 20,556,600. Yan siya na. Okay, so our total liabilities and shareholders' equity translated before the foreign currency translation adjustment or current um, translation adjustment, no? Cumulative translation adjustment is 158,500,350. Okay. And since our total assets and equity, no, total assets rather, is actually 158,907,000. So, dapat ang sum din ng translated liabilities and total equity is 158,907,000. Diba? And since we have current rate method, yung imbalance, no, ng result ng imbalance natin for the is actually treated as the cumulative translation adjustment or actually the foreign currency translation reserve gain or loss. No? So since dapat ang balance niya is 158,907,000 and then we do have 158,000 158,500,250 here. So dapat i-add natin yung excess. Okay, so difference niya, that's actually, diba, 158 million, 150 million, 907,000 less 158,500,250. We do have 406,650. This is actually our cumulative translation adjustment credit. Credit since i-add mo siya, diba? Or it's actually foreign currency translation reserve gain. OCI credit. Again, so again, it shall be presented in the other comprehensive income, no? Yung cumulative translation adjustment. Okay, so it will not pass through the profit or loss. Okay, so you can actually verify that, no? The verification of translation adjustment using current or closing rate method. Okay, so you have here exposed net asset position beginning. Yan. Kasi, so, as of January 2, 2014, these are our condensed balance sheet. So we have actually here total assets of 3,540,000 in US dollars. Then we have here our monetary liabilities of 1.8 million. So our net assets is actually 1,740,000. This is actually the sum of your equity account beginning, di ba? 960,000 plus 300,000 plus 480,000, you have 1,740,000. Okay? So, exposed net asset beginning, no? Times the exchange rate. Historical exchange rate, we do have 69.6 million. Okay? And then our net asset shall be increased by, of course, the net income. And then it will decrease pag may dividend. So you have here our net income, diba? Translated in pesos, actually 13,386,600. This is actually the one we've computed kanina, no? 13,386,600. Yan. Less dividends. So our net assets shall be reduced by our dividends declared. It's 12,030,000. So this is actually the net asset position translated using rate in effect at the date of each transaction. So yan siya. And then yung exposed net asset position natin for the end of the year, or this is actually the the net assets. No? So you have here our total asset is 3,948,000. Yun nga. Our accounts payable is 640,000. Tama. And then our short-term payable is 135,000. And then bonds payable is 100,000. So you do have diba? 3,048,000 asset less liabilities of 640,000, 635,000 less 100,000. You have 1,773,000, no, as our net asset position as of December 31. Then you multiply that to the current exchange rate. So since nag-increase yung exchange rate, no, we'll expect now that's a translation gain, foreign currency translation gain or OCI na credit kasi nag-increase din naman yung exchange rate. Okay? And we do have exposed net asset position. So translated, no? Exposed net position at year end translated at the current exchange rate, we do have 71,363,250. So yung difference niya, that is actually 406,650. That is actually the change in cumulative translation adjustment during the year or net increase. And since we don't have beginning balance, so our cumulative translation adjustment at the end is actually still 406,650. Okay? Yan siya. So, you have here, no? So, 406,750 hour cumulative translation adjustment. So, in the next video, we shall be discussing temporal method na. So, thank you.